most respected and vibrant faculty of today's CP seminar, CA Gururaj Acharya sir from Bangalore, Secretary of Kannur branch CA Shivaprasad sir, Vice Chairman CA PJ Reji, Managing Committee members, immediate past Chairman Saju, past Chairman of Calicut branch Mani sir, members of the profession, and my dear participants. Very good evening to all of you. Today, yet another memorable day for Kannur branch and its members, with the presence of a vibrant professional who is a rank holder in both intermediate and CA final, and also rank holder in the CMA intermediate and CMA final. None other than our own CA Gururaj Acharya sir from Bangalore, who is going to deliberate on the topic complaints and deadlines under income tax, GST, banking, and other business laws. So I am taking this opportunity to welcome you to this virtual CP seminar of Kannur branch, and I am also thanking for sparing or taking this pain to spare 2 hours with the Kannur branch of SIRC sir. So welcome you sir, welcome. I am taking this opportunity to thanking your great support to the Kannur branch for the past many years over the various programs conducted by the Kannur branch of SIRC of ICAI. Regarding the next week program, I have already mentioned you on 18th, the institute has approved for a program with our past president CA Amarjit Chopra sir. That is on Saturday, but today morning he contacted, and due to some inconvenience he requested to postpone the meeting to 23rd of this month. He will handle the topic on common errors in the financial statement. So instead of this Saturday, it will be postponed to next week, that is on Thursday. Meanwhile, on 22nd of next week, that is on 22nd July, we have another program by CAV Patabiram from Chennai, that is Happiness Under Digital Era. And on 25th of next week, we have another program which is by the great personality and indirect tax professional, the CA Venkatramani sir, who will handle the assessment and appeal under the GST. And also we have got a consent to have a program on August 1st by the famous direct tax faculty, CAT Bhanushekar sir, Chennai, who will handle revision and reassessment and revision under the Income Tax Act. These are the programs that we have charted for the next few days. And I think Reji will inform you about a SICASA program that is proposed on the next Saturday. Now I request the Vice Chairman of Kannur branch, CA PJ Reji, to formally introduce the faculty of today's session, CA Gururaj Acharya. Thank you. Now also informing you all the Kannur branch members to fill the Google form to have the CPA credit as per the guidelines of the ICAI. Now over to Reji.
Respected Chairman CA Jayaprakash, renowned speaker for today's webinar, CA Gururaj Acharya sir, Secretary CA Shivaprasad sir, past Chairman Calicut branch CA Mani sir, Managing Committee members, fellow members of the profession, students and dear friends. It's my pleasure and great privilege to present before you a great personality, a talented leader, a friend, a philosopher and guide of the profession, CA Gururaj Acharya. CA K. Gururaj Acharya hails from the temple town Udupi, brought up in the Iron City, Bellary, and now settled in the knowledge city of Bangalore. He qualified as a chartered accountant after completing his articleship under Mrs. Guruprasad and Company, Bellary. He is presently the senior partner of Mrs. KG Acharya and Company, Chartered Accountants, Bangalore, specializing in corporate finance, corporate taxes, and company law. His academic achievements includes first rank holder of degree in commerce, 21st rank holder in CA intermediate examination, 10th rank holder in CA final examination, and first rank holder in ICAI intermediate examination, and a third rank holder in ICAI final examination. A very brilliant student. He is a member of the Bangalore Financial Reporting Review Group, formulated under Financial Reporting Review Board of ICAI, New Delhi. Was a director on the Board of Directors of State Bank of Mysore. Was a member of the Karnataka State Level Audit Advisory Board. Was a co-opted member of Expert Advisory Committee and Committee on Accounting Standards for Local Bodies by ICAI, New Delhi. He authored one book titled Internal Financial Control, Practical Handbook on Audit Report on What Can Go Wrong, published by Karnataka State Chartered Accountants Association. His article titled Company Law Updates is regularly featured in the monthly newsletter of Bangalore branch of ICAI. He is a resource person on accounting standards, standards on auditing, Companies Act, limited liability partnership, corporate finance, financial analysis, corporate tax, tax audit, etc., etc. Ask his name rightly spells out. Gururaj Acharya, a teacher, professor, and principal. Sir, indeed, we are delighted to have you here in this fine evening and are happy to hear from you, sir. Thank you.
Thank you, Raji. Now over to Acharya, sir.
Good evening to all the learned members of Kannur branch. Thanks to Jai Prakash for inviting me to Kannur once more. I remember being with all of you on 3rd of July 2019, last year July, when Sridhar was the chairman. I had the privilege of enriching my knowledge there in Kannur by talking on 4 very interesting topics then. That is one, audit reports, DPT, deposits, MSMEs, and Ben form, all pertaining to the corporates. That was, I was talking on 4 very interesting topics. Thanks to Mr. Reggie for that wonderful introduction. And last year I remember there, because I spoke on 4 topics, Sridhar and Jai Prakash were instrumental in sending me to one of the best of the 4 temples of Kannur. I mean, their names itself, even now I remember so beautifully. The Mridanga Saileshwari temple, the Rajarajeshwaran temple, the Muthappan temple, and the Ganapati temple. So for the 4 topics that I spoke, they sent me to 4 beautiful temples. I wish I could be there today to go through all those temples once again. In that earnest, I took up on myself a very interesting topic, which is very topical today for all the chartered accountants. I'll be talking on 4 topics even today, ranging from income tax to GST to banking to other business laws. So these 4 topics I will be talking, and the way I will be talking today will be something different. I have shared my questions. It will be a question and answer session instead of just a presentation session, so that we make it lively in the evening and make it also different from the before. And I know Kannur has been very, very vibrant in terms of getting the best speakers on, and that too not 1 but 2 speakers every week. I'm sure the members of Kannur must be quite enriched thanks to Corona. Corona also helps in a way that, normally last time when I came to Kannur, I had to spend 2 days to talk for 2 hours. But now I can spend only 2 hours for a 2-hour session. So I'm in at 6:45 and out at 8:45. That's thanks to Corona and thanks to the technology. So as I was telling you, I brought in the best of the speakers. I heard Venkatramani coming, Chaitanya has already come, Girish Ahuja has come and addressed you. I listened to the lecture of Girish Ahuja because the topic was very interesting to me. The topic of deemed income, which Girish Ahuja spoke. So when all such elite speakers come and a speaker like me come, maybe I am also deemed to be a best speaker, just like the deemed income. When a lot of speakers come and talk, among the best speaker, if a speaker like me come and talk, I will also be deemed to be the best speaker. Now let me start off my session with the deemed income, where Girish Ahuja ji left. And I felt that a very interesting topic. What was deemed income? Nothing new. All that we know was captured in a particular heading called deemed income. And if one may say, what is deemed income? You know, the learning experience from what I got from listening to Girish Ahuja ji was, what is deemed income? An income which is not an income in the accounting parlance, an income which is not an income according to accounting parlance, but is considered to be income for the purpose of income tax, is considered to be deemed income. Now, the next question that comes out is, how the hell does the income tax department come to know about all these deemed incomes? Very interestingly, time permitting, I would have listed it out. I mean, I have actually prepared a list of what the deemed incomes are. And those deemed incomes are nothing but we chartered accountants, when we do our tax audit, in the tax audit report, we spell out, because the accounting income is there in the profit and loss account, but the deemed income will have to be notified to the income tax department about a particular assessee through the chartered accountant in form 3CD. Be it 222E, be it 56-10, 56-9, whatever, I mean, the perks that is coming out of section 28 or any such deemed income will be notified to the income tax department through the form 3CD. The accounting income comes out of the audited financial statement, whereas the deemed income is made note of to the income tax department by the chartered accountant through form 3CD. And one very interesting thing I felt out when I was listening to Girish Ahuja ji was, there could be another type of a deemed income, very, very interestingly, of all the deemed income that he spoke of, which he did not speak of, which I thought I will start off for this particular session, is, can an expenditure be an income? Can an expenditure be an income? So can there be a type 2 deemed income? Can there be a type 2 deemed income? I mean, what I mean by that, I mean, all that he spoke of was income not there in the profit and loss account, but income for the purpose of income tax, that I would call it as deemed income type 1. The deemed income type 2 could be a situation where it is an expenditure for the accountant, but an income for the income tax department, or an expenditure for accounting, an expenditure for accounting not considered as an expenditure for taxation is equivalent to deemed income for the purpose of income tax. And how do you take it? And this is an analysis that I thought I should share with you before I start off. What could such an item be? Our famous 40A3, cash payments, or 40A1A, the TDS items on which, expenditures on which TDS has not happened. These are all expenditure, a professional fee, a salary, a rent. All these are expenditures for an accountant debited to the profit and loss account. But when a TDS is not done on such an expenditure, it is not deemed to be an expenditure for accounting for income tax purpose. So therefore could become a deemed income of for the income tax purpose. An expenditure which is not allowed, an expenditure for accounting which is not an expenditure for income tax, will become a deemed income for the purpose of income tax. In fact, there are about 16. I mean, I was making out a list of what the various type 2 deemed incomes that is expenditure for accounting but not an expenditure for income tax is also notified to the income tax department through form 3CD itself. So it could be 40A3, it could be 40A-IA, 40A-I on the TDS not done on the foreign payments and things like that. So these are all the things that I thought I will start off with. You have been getting the best of the speakers. So let me now come to my topic, which is the compliances and deadlines. Now, if you notice, a lot of deadlines have got moved this year because of COVID, and we need to keep abreast of the various compliances and deadlines, and keep aware of the various dates so that we don't miss the dates being relaxed in a particular manner. So let me talk about, we have gone through lockdowns, and I was talking about in the beginning to the chairman, Bangalore is under lockdown from today onwards for 1 week. I mean, it's quite unfortunate that the spread of corona is becoming so pandemic, and so, I mean, it has come to the next door, the opposite house. So therefore, when it was in Wuhan or in Bombay, we had lockdown for almost 66 days. Now that it is there in the neighborhood, I think it makes sense to be safe and healthy in that particular context. So we are under the unlock 2 as per the government of India is concerned. But from today onwards, for 1 week, Bangalore is under lockdown, and some more places in Karnataka are also expected to follow for the lockdown. Now look at this: a 0.12 micron sized virus is impacting the economy in a very, very big manner. Very, very unfortunate. That is the impact of these lockdowns. The virus is actually speaking on the economy. When we talk about impact of this particular COVID on the economy, it really feels sad. A lot of people, a lot of our clients are losing out on their businesses, especially those who are in the travel related. And I know Kerala is known for tourism, which is definitely impacted the most. The tourism, the travel, the hotel, the hospitality industries are impacted the most. Malls, when I know there are wonderful malls in shopping complexes in Kannur and Cochin and all those places. In fact, we were talking about footfalls and premiums in the malls. But today, unfortunately, what is happening is footfalls are at a discount and fear is at a premium. I mean, that is the situation in which we are, unfortunately. So to overcome all these economic crisis arising out of this pandemic, Government of India came out with a 20 lakh crore package. 20 lakh crore package. Let me tell you, this package was coined as Atmanirbhar scheme, and was made available to the Indian economy in bits and pieces. So we will see what are the various aspects that are covered in this Atmanirbhar 20 lakh package. So to put it in perspective, what is 20 lakh crore? What is 20 lakh crore? The size of Indian budget, is about 30 lakh crore. The entire budget outlay for financial year 2021, as announced by the finance minister on 1st February 20, was to the tune of about 30.42 lakh crore. 30.42 lakh crore. And if for the whole year for defense, for education, for health and all those aspects, 30.42 lakh crore was set aside. Now, and what is this 30.42 lakh crore? This is an outlay. What is the inflow? What is the inflow to the government? Normally in a budget, it should match. But in the Indian budget, we have a fiscal deficit. What is the fiscal deficit? They talk about fiscal deficit to the extent of 3.5%. 3.5% of what? 3.5% of not the budget outlay, but 3.5% of the GDP. When you look at this, whenever we make a project report, if there is a gap funding, the gap funding, if we say it is 3.5%, I assume that that gap is to the extent of the outflow of funds required for the project. But if I say that the outflow is 30 crores and the 3.5% in relation to the turnover of the company, that would be something actually not acceptable to the banker or to the chartered accountant himself. But unfortunately, the economists, the politicians in the country right from beginning have been talking about fiscal deficit, not in as a percentage to the budget outlay, but as a percentage of the total turnover of the country. I mean, if one may say GDP as the turnover of the country, although economically GDP means the sum total of the goods and services produced in a country. So if you net off the opening stock and closing stock, what is produced must have been sold. So therefore, I consider GDP in the accounting parallels as the turnover of the country. That turnover of the country is expected to be for financial year 2021 to the tune of about 220 lakh crore. So 220 lakh crore into 3.5% comes to about 7 lakh crore. So out of a budget outlay of 30.42 lakh crore, 7 lakh crore is the deficit. So the deficit in terms of the outlay would come to as high as 25%. Now, having as a deficit of 7 lakh in February, when we did not have the COVID expenditure budgeted, and then the government announces a budget of 20 lakh crore as Atmanirbhar scheme, imagine it could not come out of the budget, and it has to be a number which is pleasing to the gallery rather than to intellectuals like you and me. So 20 lakh crore is actually a number like what we said. somebody was asking if the C&AG does an audit of this 20 lakh number, they would say, show me where is the outflow, where is the cash outflow for 20 lakh crore. Maybe the finance minister would say to the C&AG that there is no actual cash outflow. These are all Ind AS adjustments. When I hope you know what I mean. That is the pun there. So let's now talk about the 5 tranches under which the finance minister, nevertheless, we as tax professionals and auditors have to see what is in this 20 lakh crore for our clients, and for what is that we need to learn out of this particular package, so that we are compliant as far as the clients are concerned. Now, these 5 tranches were announced in 5 different dates by the Honorable Finance Minister. The first day was concentrated on the budget and tax provisions, wherein the changes was also announced with respect to the definition of MSME. We will talk about that. The second day it was all towards the migrants, the farmers, and things like that. The third day was on agriculture. The fourth day was on certain policy reforms, including privatization of some of the public sector enterprises, the changes in the Essential Commodities Act, and finally, on the last day, they were talking of ease of doing business and certain miscellaneous provision. Now, sometimes ease of doing business, when I put it in the PowerPoint, it would look as EODB. And I sometimes have a doubt whether EODB, when they go on making EODB, it would also mean sometimes end of doing business also. If the provisions for doing the business are so stringent, then it will be end of doing business. I hope the EODB here that the finance minister spoke about would actually lead to ease of doing business. So let's now come to the specific, what were the various package announced and what is the impact that you and I as chartered accountants need to know about it. One of the interesting things that they talked about in this 20 lakh crore, mostly this 20 lakh crore was not a budgetary provision. It was enhancing the liquidity in the overall economy such that the money supply is there, because of which the demand can pump up. So that is how the entire package is built up. Out of this 20 lakh crore, about around 3 to 4 lakh crore is the amount which has to be coming out of the budget outlay. But otherwise, most of this money will only be liquidity enhancing measures by way of funds coming out from the banks to the industries, or like TDS rates getting reduced. Rates getting reduced from whatever to 75% of the rates, thereby enhancing the liquidity in the hands of the businessman. In fact, you will be surprised. Out of this 20 lakh crore, 50,000 crores, about 50,000 crores is told to come out as a liquidity enhancing in the economy by virtue of the slashing of the TDS rate from whatever rate it was to 75% of the applicable rates. So 50,000 crores is actually coming from where? Certainly the government will not lose, because whatever taxes has to be paid to the government has to be paid. If not, if my client, instead of paying, he used to pay me 1 lakh as an audit fee, he used to deduct 10% as the TDS. He used to deduct 10% of the TDS. Now, what would he do? He would deduct 7.5% as TDS. But then when he deducts a 7.5%, I cannot say 7.5% is the only tax that I need to pay. I actually need to calculate my taxes and take this TDS. If the amount of tax that I actually need to pay more has to be paid, I have to anyway end up paying either as advance tax or as self-assessment tax. So it could be a temporary measure of enhancing my liquidity, but at the end of the year, I may have to pay this in incremental tax. And another possibility is, if for companies or clients where the tax itself was not required, the TDS was not required to be made to the extent of 10%, he could have anyway approached the TDS officer by filing in a form 13 and saying that permit the deductor, give an instruction to the deductor not to deduct 10%, not to deduct at all, or to deduct a lower TDS. So that provision was anywhere there. So actually this 50,000 crores by TDS is only going to be a temporary liquidity enhancing measure. Now, another measure which has come out of the Atmanirbhar 20 lakh crore package was about 3 lakh crore is being given to the business entities through a scheme called the Guaranteed Emergency Credit Line. The Guaranteed Emergency Credit Line, by virtue of which 3 lakh crore is being given to the business enterprises, subject to certain conditions. They said on 29th of February, whosoever's turnover for the financial year 1920, if their turnover was less than 100 crores and their outstanding from all banks and NBFCs was less than 25 crores, they were eligible to draw 20% of whatever was their drawing as on the leap year day, 29th February. Please mark it, because some of the dates here, I mean, you may have to write it down in your diary to say 29th February, a very interesting date because that happened to be the leap year day. So whatever was the outstanding on the leaped date of the leap year, that is 29th February, and if your turnover was less than 100 crores in financial year 1920, and your total drawings from the banking system and the NBFC was less than 25 crores, then such a business enterprise, be it a trader, be it an MSME, be it anybody, when although they started off saying that is MSME, all businesses including MSME, that does not mean only to MSME, it is made available even to traders. Okay, that's a point to be noted. How much? 20% of whatever was drawn as on 29th of February. The actual funds flow drawn on 29th of February, one can actually go to the bank and get that much of enhanced credit without giving additional security. But one of the conditions that they told is such a business enterprise should not be an NPA or an SMA2. Now, when we go in for bank audits, we know the categorization of the accounts into SMA0, SMA1, SMA2 and NPA. So what is NPA? An account out of order for more than 90 days. What is SMA2? If they have not serviced their interest but more than 60 days, up to 90 days, then it is considered as a SMA. SMA standing for Special Mention Account. A Special Mention Account 2. So that was the account there. So for SMA2 and NPA, this amount is not, they are not eligible. However, if you are an SMA0, that is you have paid within 30 days, or SMA1, that is you have paid between 30 days to 60 days, all your interest and your account is up to date, then you can right royally go to the bank or NBFC and claim for 20% of the outstanding balance of your bank balance as your rightful, without giving any additional collateral security. However, the extended existing collateral security, existing primary security will always be attached to this additional loan. What is the risk for the bank? The risk for the bank is almost zero because this amount is entirely guaranteed by the government of India for the bank. Now, this is a point to be noted by the chartered accountants who are financial advisors and chartered accountants tomorrow when they go in for bank audit. So also this may be important because if they have given a loan to an SMA2 or an NPA account, then we should observe that and make a qualification. And things like that. So we need to know certain of the banking things that I'm going to tell you today from the audit perspective also. So we can advise our client to get this particular money from the bank. In fact, 3 lakh crore, no additional security, but the government will be giving the guarantee. So therefore, the banks will not stand to risk. I mean, the government of India out of this 3 lakh crore has estimated that 42,000 crores of the 3 lakh crore may not come back to the bank because the severity of the situation. So they estimated this 42,000 crores will have to be a budgeted outlay over a period of 3 years budget. So that is how it is talked about. Then they've also talked about 20,000 crores being made available to entities which are actually NPAs. Even a company which is an entity which is an NPA, if it had the potentiality, they have set aside 20,000 crores and said that they are also eligible under a scheme if they are able to show their viability. 50,000 crores of funds set aside for just MSMEs, okay, by virtue of creating a fund of funds. So we will get into that separately. The most important thing which has come out as for other than these cases is if somebody wants to, if he has a very great liquidity problem and he has already availed a term loan, they said, I will give you a moratorium for repayment of your principal and interest. Both principal and interest need not be repaid for 6 months beginning from March ending to August. So March, April, May. Initially, the RBI governor talked about 3 months, and then later on he extended it further to June, July, and August. So 6 months of whatever term loan commitments in terms of principal and interest, you can defer it. You can avail a moratorium and pay it later on. So how is it to be paid? Suppose you have a total term loan of 5 crore repayable every year, repayable every year at the rate of 1 crore per year. So about 50 lakhs, what is due for the first 6 months, you can pay it anytime within this 5 years, or at the end of 5 years, the balance 6 months, you can elongate the total term loan period and pay it in the balance period. But the only point to be noted is the interest which you have not paid, there will be an interest on this interest. So at the end of the term, you may have to end up paying not for 6 months, but for more than 6 months also, because there will be an interest on interest. So 5 years and 6 months could probably become 5 years, 7 months, or 5 years or 8 months, and depending on the rate of interest and the period of loan availed. So this is as far as the term loan is concerned. What about if I have availed just a working capital facility? If I have availed just a CC, cash credit overdraft working capital facility, the interest that is arising from 1st March to 31st of August, I don't have to pay. I don't have to pay does not mean there is a waiver of interest. Please note that although the industry is asking for it, I'm sure that it would not be sensible on the part of the bank to waive the interest altogether. What they have told is this interest from 1st of March to 31st of August, whatever is accumulated, you can have the right to defer the payment of interest anytime up to 31st of March 2021. So these points again, we may have to note as advisors to our client, as well as when we go in for audit of the banks, we need to note about these provisions. About RERA, Real Estate Regulation Act, one has to give a promise by what date he will deliver the goods, deliver the buildings or the land or whatever to the customer. The scheme has given an extension of 6 months, automatic extension from the promised date by 6 months. Additional 3 months thereafter is also possible, is what is told as per the scheme. Then the Insolvency and Bankruptcy Code has also pushed if there is any insolvency, we know that a person who is having a default of 1 lakh, if he has defaulted any amount of more than 1 lakh, I can apply for, if he has not paid me 1 lakh or more, either as a financial creditor or as an operational creditor, I can always go back to the tribunal and tell that this company has to be wound up because he has not paid the money. So I can threaten him to pay me, or I can apply for winding up of that particular company. So what they have told is, first they increase that 1 lakh threshold to 1 crore because there may be a lot of defaults during this COVID situation. And then later on, they said for 6 months period, there will be no person like me, no affected person, although he's not paid as a financial creditor or as an operational creditor, can apply for the insolvency of that particular company for a period of 6 months, understanding the situation. Out of the 20 lakh crore, before I go into the income tax provisions specific, one of the interesting things that they told about, they set aside, was 500 crore towards the beekeeping initiative. This is very close to my heart because I like honey. The government of India liked this particular beekeeping initiative so much that out of the whole thing that I could see, one very sweet provision which was kept aside was towards beekeeping initiative. I would like to talk about this at the end because it has got some connection with our profession. I will talk about that at the end. So now let me come to the income tax provisions. Now what came out initially, before the, around the Atmanirbhar period, they came out with a very important act. They, because all these amendments have to come through an act, and an act means the parliament should be sitting, and since the parliament is not sitting, they had to move the provisions by virtue of an ordinance, and that ordinance came in as a Taxation and Other Laws Ordinance Act 2020. So a very small act that is. It is just running into 4 or 5 pages. I have that in front of me. It runs into about 6 pages, just 6 pages. It was given out on 31st of March 2020, much before the Atmanirbhar scheme was announced. The 6-page Taxation and Other Laws Ordinance 2020 came in. What they did there, with respect to income tax, they pushed certain dates, which was there in the Income Tax Act. They pushed the certain dates, they furthered the dates, they advanced the dates. So we will see those dates. But according to this, according to the Tax Ordinance Act, what they said is, whatever was to be done between 20th of March to 29th of June, whatever had to be done between 20th of March and 29th of June, if you do it by 30th of June, it will be considered as though it was done between these 2 dates. Okay, so I'll just give you an example what was kept in mind. The best example is, in case the return for the financial year 18-19, financial year 18-19 had to be filed, the last date for it to be filed was 31st of March 2020. And since 31st of March 2020 fell between 20th March to 29th June, they said that even if you file it on 30th of June, it is considered to be filed within 31st of March 2020. So in short, lot of dates got extended. They thought, in the Finance Ordinance Act itself, they said it can be done up to 30th June 2020 or such extended period as may be prescribed. Now, whenever it is told in the Act or in the ordinance that as may be prescribed, if these words are used, then the prescription can come by the doctor instead of the God. The God is the Parliament or the President for ordinance. The doctor is actually the Finance Ministry. So using this, they felt that 30th June also was not sufficient for meeting this, because Bombay and so many other places were continuously under lockdown. They extended the prescription because they had the right to prescribe through the ordinance itself. They said that they are going to extend these dates by, there was a notification on 24th of June 2020, further extending the dates. So today, the dates that I'm going to tell you is the dates which it stands today. Ordinance told something, the notification of 24th June 2020 extended the dates further. So the dates that I'm going to tell you for the various deadlines that I'm going to talk now is the dates considering both the ordinance and the notification. The first 31st July, that means another 16 days from now. What are the things that we need to know? By 31st of July 2020, all the belated returns of financial year 18-19 has to be filed. Afterwards, you cannot file a belated return, or for that matter, you cannot revise the return of 18-19 beyond that particular date, which was original deadline was 31st of March 2020. Ordinance extended it to 30th June 2020, but today it is standing at 31st of July 2020. Similarly, the TDS and TCS quarterly return for Q4 of financial year 19-20 has to be filed. Original due date is 31st of May 2020. The revised due date by virtue of this notification is 31st of July 2020. The third point to be noted is with respect to Section 80 deductions. All Section 80 deductions for the financial year 19-20 normally should be done within 31st of March 2020, by the end of that financial year. But this year, because of the last 10-15 days, the country was under lockdown, they pushed the dates initially up to June, now up to 31st of July 2020. So what does it mean? It means that if you want to make a donation under 80G, or if you want to make a LIC 80C and claim 80C deductions, or any such expenditure based deduction. So all such expenditure based deductions for financial year 19-20, you still have the time to make that particular expenditure or payment up to 31st of July and still claim it good for financial year 19-20. That's a very important point to be noted. Now, point number 2, all audit reports have been pushed up to 31st of October. 31st of October, if I give my audit report, it is sufficient. Originally, it should have been September. They have pushed it up by 1 month, 31st of October 2020. Now, let's now talk about income tax returns. The income tax returns for financial year 19-20, originally there were 3 dates, we know, July, October and November. I mean, they pushed September to October in this budget. So July, for this month end, we should have filed all the returns for non-tax, non-audit cases. Non-audit cases, it could be non-tax audit or non-companies for that matter. By 31st of July, we should have filed. And by 30th of October, I should have filed all tax audit and company audits. And by 30th November, I should have filed the transfer pricing cases. So now what they have done is, for all the 3, the deadlines have been pushed to 30th November 2020. Now, but the very important catch, if we think that July returns can be filed by November and we sleep, and if such a return has a self-assessment tax of more than 1 lakh to be paid, then the interest under section 234A, will have to be paid from the next day from the original due date. Let me put it this way. Now, there is a salaried employee or a person having no business income, but a huge interest income or dividend income this year. So all such incomes which does not require audit, and it was not a company, there, if the tax payable is, let us say, to the extent of 35 lakhs or 40 lakhs, self-assessment tax paid, he has not paid the advance taxes. So 35-40 lakhs, 234A interest will be applicable from 1st of August 2020. So there is no respite. So what you can see here now, mostly the government also needs funds. So most of the extensions are only in terms of filing the returns rather than actual payment of the taxes. So they have ensured that the taxes to the government comes to it within the due date. If not, there are interests levied. Now, and this interest, if you are delaying the tax payment, if you are filing the return delayedly, no problem, but please ensure to pay your taxes. So that's a point I thought I should tell you. Please ensure that in case of all your high net worth taxpayers, assessees, you calculate on 31st, but before 31st of July, what is their tax due, and ensure that it is gotten paid before 31st of July. Similarly, for the tax audit cases or the company audit cases, instead of waiting for November, you should complete it by October. Otherwise, you end up paying that 1 month 234A, a point to be noted. Then the fourth very interesting thing that they pushed about is the Vivad Se Vishwas, what was originally by 31st of March and 30th of June with 100%, 110%. Now, entire thing has got pushed to 31st of December 2020. So we have got a lot of time for doing the Vivad and the gaining the Vishwas. So 31st of December. Then the next point that they came out was with respect to all those compliances. Or before I talk about all other compliances, let me finish off one other important compliance with respect to section 54 to 54G. 54 to 54GB, popular things are section 54, section 54F, section 54EC. I mean, these are sections which talks about deadlines. If I have sold an immobile property or and investing it another residential property, 54, or sold any other property or any other property and any other capital asset, investing in a residential property, I will have to invest in the residential house property within 2 years if it is a case of purchase, and within 3 years if it is a case of construction. Similarly, for 54EC, the bonds, the capital gain saving bonds, I have to invest within 6 months from the date of sale of that particular immobile property. Today, only the immobile property is eligible for 54EC. So that's 6 months, 2 years, 3 years. If those end date the end date, the expiry date of the 2 years, 3 years and 6 months falls between 20th March to 29th September. Note this very importantly, falls between 20th March to 29th September. Even if you complete that house or purchase that house or purchase that the security within 30th of September, it will be considered as a good enough compliance. So that's a point to be noted on the fourth point. The last point on income tax is they have taken a general provision. They have taken a general provision for the department and for the assessee. Now for the department, they said, if there is any issue of notice, intimation, notification, sanction, passing of an order, completion of proceeding by the income tax authority, let us say they had to complete an assessment by, you know that the assessment for 18-19 is now hanging on us, and the notices have been issued to us. And the last date, according to the Income Tax Act as it stands, all these assessments for an assessment year 18-19 should be completed by 30th of September 2020. As per the Income Tax Act, it should be completed by 30th September 2020. Now, initially the press conference, the finance minister said it will be pushed up to 31st of December, but eventually when it came on the 24th June notification, it came in as 31st of March 2021. So the assessment year 18-19 assessments, or for that matter, any such assessments which wherein the due date was falling between 20th March to 31st of December. They have taken 31st of December. All those things get extended up to 31st of March 2021. So this is for the department. Now, similarly, they have told that if there is any filing of appeal or furnishing of return, statement, application, reports, any other document under Income Tax Act, Wealth Tax Act, Benami Property Tax Act, they have given a host of other acts. The important one is the Income Tax Act. So all these acts, if your time limit expiry, let us say I had an appeal, an income tax order for revised order came to me on 29th of February. It came to me on 29th of February. And normally the time limit for filing an appeal with the Commissioner of Income Tax Appeals is 30 days from the date of receiving the order. And so this date of receiving the order was 29th February. 29th of March was the last date. Now this 29th of March falls between 20th March to 31st of December. Originally this was talked about 29th of June. By 24th June notification, they extended it up to 31st of December. Any appeal or any compliance by the assessee which is required by the act, apart from what has been just now I told you about income tax return filing dates or the TDS return filing dates, all those things, the Vivad se Vishwas and things like that. So apart from this, all other compliances by the assessee, if the expiry date falls between 20th March to 31st of December, it stands extended to 31st of March 2021. So that is the thing. And the last thing on income tax is, very interestingly, on income tax, they said that all the pending refund orders will be released for the assessee. So if you have got any income tax refund pending, this is the right time. Without asking, we have got it. I'm sure most of you have got it. If you have not got it, you can make a request with the assessing officer and you are likely to get it. The second topic from income tax, we will move to GST. I'm just talking about all this first, and then after 15 minutes, I will open up my slide and take up the issues. How do we deal with, I've brought in 36 issues, and by answering those 36 issues, the balance doubts, if any, that we have will also get evaporated to the best extent possible. Let's talk about GST. As I told you, GST has got tax payment. The tax payment return is called the 3B, and the information filing with respect to the turnover that I did is called R1. Now, the department is more concerned with 3B because 3B comes with a check. R1 does not. It's an information for control purpose. So 3B, let me finish off 3B. Is there a relaxation for 3B? For the purpose of 3B, they categorized the assessees into two, the big assessee and the small assessee. For them, the meaning of big assessee means any person any assessee whose turnover in the preceding year was more than 5 crores. So he's considered to be big. So for a big assessee, there has been no extension with respect to payment of taxes, because the government depends on the GSTs and the income taxes for paying salaries to the defense personnel, paying the salaries to the police personnel, paying salaries to the IAS officers, and taking care of the health, the PPE kits, so many in the education. The entire 30,42,000 crores of budget, it depends on the tax inflows. The total tax inflow that the government of India collects from income tax and GST is to the tune of about 16 lakh crores. So to this extent, the government cannot wait. Okay, so what they did was, from the big assessees, that is more than 5 crores, they said, you please pay on the due dates. I mean, what if my business is closed? I mean, we expect you to have an online bank and you pay out of that. So after all, GST is collected and paid. You don't have to pay it from your pocket. So that's the point they said. So if you are a big assessee, you have to pay it on the due date. However, they have given exception for more than 5 crores for 3 months. You look at my fingers, February, the small finger, small month. I mean, it's easy for me to remember. February, March, and April. They said for February, March, and April. However, even for big assessees, I'm giving a small relaxation of payment of interest. So they said that if I will first of all give you a 15 days grace period. When normally all this, the GST payments have to happen by 20th of the next subsequent month. I'm giving you a 15 days grace period, even for big assessees, for these 3 months. And beyond that, let us say for February, you should have paid it by 20th of March. And 20th March, more or less, the lockdown had started. So I will give you time till 5th of April. From 5th of April, I will charge you a nominal rate of interest at 9% instead of 12 or 18%. So they charged 9%. Up to what date? All these relaxations were only up to 24th of April. Up to 24th of April, a reduced rate of interest. So beyond that, they have started applying the regular rate of interest. So that is as far as the big assessees are concerned. As far as the small assessees, less than 5 crore assessees, they have really given us a relief. So what they did was, they said February, March, and April. February, March, and April, we can pay it by 30th of June. By 30th of June. Now that is already gone now. February, March, and April, we should have paid it by 30th of June. However, they said that you can pay till 30th of September if you are not able to pay it by 30th of June with an interest of 9% per annum. So that is the reduced rate of interest. So February, March, and April. Then May, June, and July. The May, June, and July is another sect where they said May, June, and July for a small assessee, you can pay it by 30th September without interest. So that is as far as the payment is concerned. Let's talk about R1 filing. R1 is normally an academic filing for the department, only for control purpose, how much turnover I have done. So the dates for February, March, and April have got extended both for large assessees and small assessees. I will talk about that when I show you the slides. Mostly for, for R1, the type of assessees have been categorized into more than 1.5 crores turnover, less than 1.5 crores turnover. Now, why for R1, for less than 1.5 crores turnover, always we have to file the return on quarterly basis. So more than 1 crore, we have to file on monthly basis within the 11th of next month. For less than 5 crores, less than 1.5 crores have to file within 30 days from the end of the quarter. So they have given time till July. They have given time for March, April, May for filing R1 for up to July. Staggered dates have been given. So one very interesting thing, one very important thing to be noted is, if you fail to file or pay the taxes within the extended due dates, just now I told you extended due dates, within the extended due dates, if you fail to pay the taxes, then the interest will be 18% from the original due date and not from the extended due date. So that's a very important point to be noted from the reading of the notification. The next point, all of us are aware that today input tax credit is available not by virtue of me having the invoices or not by virtue of me making the payment to my vendors. Input tax credit, like in the case of TDS, is available to me based on the amount that is visible in Form 2A. what is available in form 2A, that is whatever the GSTR return that R1 is filed by the vendor. So with the moment I make the payment, he files R1. Based on that R1, when he shows me as the person on whose name he has raised the invoice and received the payment, my 2A gets reflected, and my input tax credit, although in my books and in my based on my invoices, it may be 1 crore. But then if in the 2A, it is shown as, let us say 70 lakhs, it is shown as 70 lakhs, I will be eligible to claim 10% over what is shown under 2A. That is 110% of the amount reflected in 2A as my input tax credit. That is, I can claim only 77 lakhs and not 1 crore as available in my books or through my invoices. So this is called the rule of 2A. This rule of 2A is suspended for all assessees from February to August. From February to August, you can claim the input tax credit based on your books of accounts rather than what is reflected in 2A. But in the month of September, this rule of 2A will apply retrospectively. So that's a point to be noted. So by that time, all of them we expect to have been filed R1, because the 2A gets reflected based on R1. Since R1 nobody is filing, maybe my 2A is not up to date. So I can file, if I am a big large assessee or any other case, I can file, I can pay the taxes claiming the input tax credit based on my records and not the 2A records. Now for all other compliances, for GST, just like income tax, if the department wants to give an order, give a give a notice, and if the timeline happened to be between 20th of March, and look at this, for income tax it was 31st of December, here it is 30th of March, 30th of August, 30th of August. Now one important point to be noticed between income tax and GST is income tax ordinance only had to extend the date, whereas for GST purpose, the GST Act has already given the power to extend the dates to the I said, the God had already given it to the doctors or messengers or pujaris in this case. So the department itself could extend it. So all these extensions are coming from the CBIC. So from there, they said they have given differential dates, 20th March to 30th August. Whatever notices, whatever orders has to be passed can be given any time before. If the date of expiry happens between these two dates, it is by 31st of August. If it is done, it is considered to be good. Similarly, for the assessee to file the appeal or to make an application or furnish report, if it falls between these two dates of 20th of March and 30th of August, it is considered to be good if you do it by 31st of August 2020. And all of us know that the GST tax audit report, the GST tax audit report which we filed for 18-19 has got continuously extended, and for the moment 19-20, I don't even know what is the original due date now, when it should have been December, but now for 18-19 we have got time to file it by September 2020. So let me now come to Companies Act. Now regarding Companies Act, there has been some very good relaxations, more than what was expected for meeting the corona relief. The best part is any form which you have not filed. Now you remember we were talking about BEN, we were talking about DPT, we know we have to file AOC4, MGT7, the annual returns and the financial statements, and any return any form which we have never filed with the company's ROC or MCA website since the inception of the company. Why inception of the company? They have talked about since 1956 Act also. If you have not filed anything from that date to this date, you can file it now. Between 1st of April to 30th of September, they have come out with a scheme called the Company Law Settlement Scheme, according to which you file all the returns without paying 1 rupee extra of additional fee. Only the normal filing fee will have to be paid, and the additional filing fee is waived off. That is called the Company Law Settlement Scheme, which is also available for LLPs. Also for LLPs, this scheme is available between 1st of April to 30th of September. So please make use of this scheme. So I mean, if your problem started for COVID from, let us say, March of 2020, they are not talking about March 2020. They're talking about since inception of your company. So that's why I said a relief more than to meet the pandemic situation. So that's the point to be noted. But two important forms which cannot be filed under the company law settlement scheme. One is the SH7, whenever we increase the authorized share capital, and the CHG forms, whenever we take a secured loan, the charge on that particular security which we have to notify to the ROC, these two forms you cannot file under the CLSS scheme for the reason that the payment of the additional fee, apart from the additional fee, you also have to pay ad valorem charges. So the SH7 when I file, depending on the amount of authorized share capital, and the CHG form, if there is no delay, I just file the fee, and the maximum, please note, for CHG1 and CHG1 particularly, the maximum time by which I can file this particular form is 120 days from the date of creation of the charge. After that, I cannot file this form at all. That means the charge itself gets, I cannot show that particular charge creation. So it has to go through the tribunal only afterwards. So within 120 days and beyond, and that also from 30 days to 60 days, 60 days to 90 days, 90 days to 120 days, the payment of fee, apart from the additional fee, there is an ad valorem charges based on the loan amount. The fee has to be paid to the MCA website. So because of these ad valorem charges being there, the government has told that these two forms are not covered under the CLSS scheme. But let me tell you, the government also came out with, for the purpose of CHG1, they have given certain relaxation. What is that relaxation? This on 17th of June, there was a notification to say, 17th of June, there was a notification to say that if this 120 days happen to be any time after 1st of March, up to 30th of September, then if their expiry date of 120 days happened to be between these two dates, there was every reason for you not to file. So therefore they said these two dates will be frozen. If it happens 120 days happens to be between these two dates, even if you file it by 30th of September, it will be considered as a good enough compliance. You don't have to go to the tribunal. The second point on company law is whatever contribution is made to PM CARES fund. The PM CARES fund, they created a specific fund from the Prime Minister's office to take care of the COVID relief programs. So any contribution which is done through the PM CARES fund will also be considered as covered under Schedule 7 of the Companies Act for complying with the CSR requirement of the company. So contribution, in fact, CSR, every company which has a profit of 5 crores, a turnover of 1,000 crores, or a net worth of 500 crores, has to spend 2% of its net profit towards the CSR. If this amount is not spent, very interestingly, for the moment, there are existing provisions and a stale provision. The provision yet to be notified. The existing provision, if you don't spend the CSR, is you'll have to report it in the director's report. That's it. Now, once the 135 subsection 5 and 7 gets notified, what happens is if you don't spend this money, if you don't spend the CSR, whatever money, you will have to transfer this amount. You have to transfer this amount to a fund created by the government, something like the IEPF fund, wherein you'll have to transfer this fund to that particular account. So that is the requirement. And if you don't do this, the existing provision says you may be arrested. That is why there was a big hue and cry on 135. How can there be an arrest provision for CSR non-compliance? Now they have the amendment bill of 2020, Companies Amendment Bill. That is what we talked about, EODB, ease of doing business. That is ease of doing business. May they said there will be no arrest provision. They will delete that. Right now, if you read 135, the penal provisions read as though there will be an arrest. But all these provisions are not yet notified. So therefore, without it being notified on the arrest provision, they will remove. They will substitute with the penal provisions, both on the company and on the officer in default. So that is how the provisions will be on the CSR. Just an aside, that is. Now, video conferencing, for the purpose of board meeting, or the general body meeting, they said that you can have your extraordinary general body meeting or board meeting up to 30th September on a video conferencing mode. In fact, board meetings could always be held under video conferencing, except for certain few provisions like approval of financial statements, approval of a merger and acquisition, an audit committee meeting which takes on record the financial statements. So like this 3 or 4 provisions had to be done in a board meeting physically with the board members being present. So that they said even for those restricted category of board meetings, also today meetings can happen through a Zoom meeting like this, as long as the provisions for audio-visual mechanisms are taken care of. Like it should be recorded, there should be a place, somebody should be the chairman, all those provisions have to be complied with, and a meeting can be held. In fact, today Reliance Industries Limited AGM was conducted through the audio-visual mode. I had to participate, but because of my work I couldn't. So that the point I'm saying is, today EGMs and AGMs can also be conducted through a audio-visual modes, and the voting will all be e-voting. And lastly, very interesting thing for us is CARO 2020. CARO 2020 has been deferred by 1 year. Such a relief for us. Otherwise, CARO 2020 had certain provisions which in this situation we would never have been able to answer. For example, one of the questions that was asked in CARO 2020 is the company capable of meeting its financial commitments in the next 1 year? This had to be told by the auditor. As an auditor, I have to give an observation whether the company is capable of meeting its 1 year's financial commitment according in the opinion of the auditor. Now, today, when this is going concern or meeting the financial commitment on behalf of the company is very difficult for the auditor to comment. But looking into the financial statements is one thing. Looking into the future, which is so uncertain, is another thing. So thankfully, this has got deferred. And when it gets deferred, I would make an earnest appeal. Maybe all of us here should make an appeal to the government to remove that provision forever from the CARO provision itself. So that's as far as the Companies Act is concerned. The last point is on the banking. Mostly I've told you about the banking. Only thing is the rate of interest with respect to bankings, what we call the repo rate and the reverse repo rate, has got substantially reduced. Repo rate is the rate at which Reserve Bank of India lends to the commercial banks, and reverse repo rate is what the commercial banks, when they place the deposit with Reserve Bank of India, what they get that interest. So repo rate has been reduced from 5.15% to 4%. So what happens is banks would find it attractive if they don't have enough money to borrow at a lower rate of from Reserve Bank of India and onward lend it. And the reverse repo rate, when it is reduced from 4.9% to 3.35%, it disincentivizes the bank if it is flushed with funds. Today, State Bank of India is saying that we are flushed with the funds, there are no takers. So they may be incentivized to keep it with Reserve Bank of India, the surplus funds, but then today they have been disincentivized, saying that instead of what you are getting at 4.9%, today if you keep with Reserve Bank of India, you will get only 3.35%. So term loan moratorium, working capital deferment, specific terminology is used for 6 months. We have already discussed. And the GECL, that is the Guaranteed Emergency Credit Line of 3 lakh crore is already made available. Please make use of it. And this is going to expire by 31st of October. So if the scheme says that if an entity takes it and 3 lakh crore gets exhausted, or 31st of October, whichever is earlier, this scheme gets extended. So please make use of this particular scheme. So I come to the end of my presentation, but as I told you, I will now take you on through some of the issues that I have marked for this particular session. JP, please tell me, is the going good?
Yes, sir. Yes, going good, sir.
I had sent a list of 36 questions.
Yeah.
JP for sending it to all the members there. I'm sure he would have sent it, or otherwise also I will now take up each of these questions. And finally, if you have any questions on these questions, or you have any issues, otherwise we can take up that. So I will take up my question number. This is a presentation which starts with questions. So I said any questions from your side is also welcome. Let's not talk about so let's talk about salaries and PF, the issues with respect to salary and PF. Initially, the government advised that the salaries and wages should be paid during the lockdown period. The advisory has since been withdrawn. In fact, this advisory was given by the government on 29th of March 2020. I mean, who gave this advisory? Now let's talk about how did the government get the power to go in for a lockdown? I mean, in a very jocularly manner, we were discussing what is the difference between a lockdown and a lockup. Then one of the chartered accountants, he gave me a very good answer. He said, if you don't comply with the requirements of lockdown, you will end up in the lockup. It's a very funny answer that is, but the point that I'm trying to say is, where did the government get the power to announce for this lockdown? They have something called the Disaster Management Act of 2005 or the Epidemics Prevention Act of 1895. Now these two acts have empowered the government to give such a dictum to the what should I say, citizens of the country, saying that you should come under, you should all be staying in your houses. Now, this is now proved to be legal. But apart from this, they talked about during this lockdown period, all the employers have to pay salaries and wages to their employees. Now, this question is, now the government is making use of the Disaster Management Act of 2005. On 29th of March, the Ministry of Home Affairs came out with a circular saying that none of the employees should be terminated and all their employees' wages and salaries must be paid. So this was the dictum that was given. On 17th of May, because that is the time when the lockdown was withdrawn and the unlocking 1, unlocking 2 started. By then, the movement had started. So 17th of May, they said this circular issued on 29th of March stands withdrawn. So up from the issue that remains is from 29th of March to 17th of May, this particular order was holding good. Now the question is, as an auditor of the company, whether there is a legal obligation on the employer to provide for or to pay wages during the lockdown period. Now I am doing the audit of a particular company. Now they have paid very little, but then they say that they will not pay the balance. So as an auditor, should I actually make provision for wages based on this particular circular? Now there what happened was, there was a Supreme Court order on 12th of June to say that this particular order needs a thorough look. So please don't harass any of the employer who has not paid because tomorrow, based on this circular, if I have not paid a salary because I don't have the ability to pay, because my business is not happening, so where from will I pay? I mean, nobody is paying me, so where from I pay? So that is a question that was asked by the litigant there. So he approached the Supreme Court to say that this is ultra virus. I mean, you can apply for a lockdown, but to tell the employer that you have to pay in spite of you not getting anything in return from the employee is ultra virus. So the Supreme Court said, please don't harass. Otherwise, if the Supreme Court had not told this particular stay, any employee could have gone to a police station and would have got the employer arrested. So for the moment, it looks like there is a stay on this particular thing. So unless the stay is vacated or decided against the litigant, that is in favor of the assessee, in favor of the government, this provision will hold good. Otherwise, from 29th of March to 17th of May, the government, the employer has to pay, subject to this stay. Now, I have a different take on this. Always I talk about from business values, from goodwill angle and another, if I have the ability to pay, it would be a good enough reason for me to pay. Because as an employer, I am a risk taker, and an employee is an employee because he is averse to risk. So if I have the ability to pay, I better pay and gain his goodwill. Okay, but only the problem that we are facing now is we went on this particular what should I say? We went on this particular principle, but then lot of our clients are asking for a reduction, and we don't know if further there will be a lockdown, and none of our staff in our own office, I'm sure it is so in your offices also, the employees are not coming in, even for audits, they are not prepared to go. So how do I pay if I am not getting paid? So while it is good to say, continue to pay if you are having the ability to pay, morally it is very good, you will earn the goodwill. But if you can prove that you don't have the ability to pay, nobody, even the Supreme Court cannot force you to pay, because if you have a hands up case, there is no way that you can sell your personal belongings to pay. So that is the answer for this question in my opinion. And an employee, second question, an employee is undergoing quarantine or COVID treatment. After the lockdown, that is right now, will the period of leave be considered as a paid leave or whether it will be a leave without pay? In my opinion, definitely it will not be, because the government has not given. I'm told some of the states have made it mandatory to pay during the COVID treatment period or the quarantine period, but at least in Karnataka and Kerala also, as I know, it will be considered as a sick leave rather than as a leave with pay. So our employees union, the third point is, our employees union has agreed for a 20% pay cut for the next 6 months. How will this pay cut affect? How will this pay cut affect? How will this pay cut affect the employees provident fund? Whether employees provident fund is paid or the reduced pay or on the original salary. Now let's talk about the relief. In fact, I did not talk about one of the important relief given by the government of India with respect to PF. Now, what they did was they talked about eligible employers and other than eligible employers. I will talk it as type 1, category 1 employers. Who are category 1 employers? They said all those employers who have less than 100 employees, out of which at least 90% of them are drawing less than 15,000 rupees a month. So both these conditions should be complied. They are having number 1, less than 100 employees, and number 2, they are at least 90% of such employees are drawing less than, if more than 90% are drawing more than 15,000 rupees, then it will not be considered as a category 1 employer. So if you are a category 1 employer, then 12% of employees contribution and 12% of the employers contribution for 6 months beginning March, ending August will be borne by the government of India. The best scheme. But this I would say is actually coming out of the budgetary allocation. This is for category 1. So I repeat, who are category 1? If the number of employees in your organization is less than 100 and at least 90% of such employees are drawing less than 15,000 rupees a month, then 12% employers contribution and 12% employees contribution will be paid by the government of India. In this case, the return has to be filed on time. And why will the return have to be filed? Because the employer will have to pay the administration charges or whatever that is, that has to be paid, and he has to upload the return. Automatically the payment will happen from the government. Category 2, who are the category 2 employees? Other than category 1 are considered to be category 2 employers. So for them, the government of India said, if you are not a public sector enterprise, not being a public sector enterprise, they have given an option. They have given an option for the employer to pay 10% instead of 12% PF. So that is the only advantage for the month of, and that they have said for the 3 months, May, June and July. For May, June and July, they can pay 10% instead of a small relief there. Now this reduction of 12% to 10% from the employer's contribution will be a saving to the employer, and it will be a loss to the employee for sure. Now, as far as the employee's contribution of 12%, he can also pay 10%. It will be a saving for him immediately. And of course, it will be in the long run, he's not going to get back this differential. So now the question that is charged is, our employees union has agreed for a 20% pay cut for the next 6 months. How will this pay cut affect EPF? Whether EPF is paid on the reduced pay or on the original pay. So this is on the basic pay and DA only. So therefore, if the basic pay itself is going to come down by virtue of a negotiation, there is no need for you to pay it on that higher amount. On the reduced amount only you can pay. Okay. Now let's talk about the next question. What is the new deadline for making? What is the new deadline for making the investment eligible for deduction under 80C for 1920? As I already told you, the original deadline for claiming 80C for 1920 should have been 31st March as per the Act. As per the ordinance, it moved to 30th June, but the notification taking the power from the ordinance now is 31st of July. So as long as you are doing any investment for 80C, 80G, any 80 deduction claimed through, there are income oriented deductions, expenditure oriented deductions under 80. For expenditure oriented deductions up to 31st of July, if you make it, you can claim it for financial year 1920. The next question is, will new LIC policy taken after 1st of April 2020, on which premium is paid before 31st of July, the extended date, be eligible for a deduction under 80C for the financial year 1920? Now, one may say that I have, let us say I have not taken a policy at all. For the existing policy 80C, I understand, but I had not taken a policy at all. I am taking the policy only now in the month of, let us say, July, 15th July. And can I take that for the financial year 1920? The answer is an emphatic yes. It's an emphatic yes, because you are not able to take this LIC. You had an option of taking this new LIC policy from 20th March to 31st of March. Because of the lockdown, you are not able to take. So now you are taking it, and any new policy or existing policy up to 1920, whatever you pay. In fact, I mean, we were debating in our office. Suppose somebody is paying 25,000 rupees every month as LIC, and that's the only thing that he has paid. Only thing that he has paid. And he has been continuously paying Q1, Q2, Q3, Q4. And in Q1 of 1920, he has also paid 25,000 rupees. Can this 25,000 also be claimed for 1920? The answer is an yes. That is the answer that we are getting. So 1,20,000, because up to 1,50,000 you can claim under 80C. So this 1,00,000, this 25,000 rupees also, because on payment basis you can claim. So as long as you are not claiming this 25,000 both in 1920 and 2021, you can definitely claim it in 1 year, which option is given in 1920. So that's the answer that we are getting. Point number 6, can donations made to that should have been made to PM CARES fund in financial year 2021 be claimed by the companies opting for 22% tax under 115 BAA. Now, all of us know there are two important sections, 115 BAA and 115 BAB. 115 BAB is for manufacturing companies, and 115 BAA is other than manufacturing companies and other than those who are eligible for 115 BAB. So if you are coming under BAB, your tax rate is 15%. If you are coming under BAA, your tax rate is 22%. So normally we know the tax rate is 30% or 25%. 30% if it is more than 400 crores turnover, 25% normally. But if you want to give up a lot of deductions and exemptions, you can come and pay 22% plus surcharge plus cess, which eventually comes to 25%. Anyway, 22% is the basic tax. So this 22% tax, you have to give up a lot of deductions. One of the deductions for financial year 2021, that is the current year, is 80, section 80 deductions. All section 80 deductions have to be given up. But if a company has actually given a deduction, I mean, has actually made a contribution to PM CARES fund in the month of, let us say, anytime before July, he can opt to say that it is pertaining to financial year 1920, which in fact in 1920 also 115 BAA was there. In BAA, section 80G was an acceptable deduction for financial year 1920. Only from 2021 onwards they removed that. So you can go and claim this PM CARES fund in the financial year 1920, even if you have done it in 2021. The next bit of question and extension for that is, what if such donations are made in August 2020? Because I said by 31st of July 2020 as it stands, you can claim it in the previous year. If you make a contribution to PM CARES fund, it will not be eligible for claiming. In 1920 you cannot claim. In 2021 the scheme itself has got, I mean, if you are coming under 22% under 115 BAA, you cannot claim this deduction. Next question is, our house property was completed. Our house property was completed in the month of March, but we could not get occupation certificate from municipality due to lockdown. Can we consider the property as completed house? Now this is basically for the purpose of 54 and if I have to claim 54 or 54F. So 54 sale of one residential house property, investing in another house property. 54F sale of any other property other than residential house property and investing in residential house property. Here capital gains has to be invested. In 54F, entire consideration has to be inserted. So that is the point. Purchase within 2 years, construct within 2 years for both the cases. Our house property was completed in the month of March. but we could not get occupation certificate. Now, for the purpose of claiming 5454F, is occupation certificate a basis or actual funds flow is the basis? In all, there have been established court decisions to say that as long as you are able to give the payment proof that this amount has been spent, it need not actually lead to completion or construction. So that's the answer that we are getting. Now, however, even this occupation certificate, if some of the courts say it is the basis, then we can say that if the deadline happened to be any time between 20th March to 29th of September, even if you did it by 30th of, any time before 30th of September, it will be considered as a good enough compliance. This is a slide which talks about the various due dates, which I've just now told. PMK has been talked about. Okay, I received an IT assessment order on 29th of February 2020. I already discussed this particular case law when I explained the provision on which I was to prefer an appeal with the Commissioner of Income Tax appeal. So what is the last date? By 29th of March 2020. Due to COVID-19 pandemic, I was not able to file the appeal within 30 days. Okay, is there any relief? So we already saw whatever deadlines in income tax for other than the top 20th March to 31st of December. 20th of March to 31st of December 2020, extended up to 31/3/2021. So even if I do it, file this appeal before 31/3/2021, I don't even have to apply for a condonation. As a matter of right, I can royally say that I am eligible for filing this appeal anytime up to 31/3/2021. An asset has been installed and ready for use, but could not be put to use in the month of March 2020 due to lockdown. Will it be entitled to depreciation during 1920 for income tax, considering the fact that commissioning and installation certificate has been issued by the vendor and certified by an independent third party? Now, for an asset to be claimed for depreciation, should the asset be actually be put to use or should be capable of being put to use? Now, the answer that we have and a lot of justifications and case laws in our favor are, it is sufficient if the asset is capable of being put to use. Now, if I'm able to justify that, I am good enough for the compliance. So therefore, if the asset is proved to be capable of being put to use by 31st of March, even though I did not have an actual order on which the machine could really work, it is sufficient for me to claim the depreciation. However, if the machine was not capable of being put to use, the mechanic had to come and install, the mechanic was not able to come, and therefore it was actually put to use in April, May, June, then unfortunately, this extension will not be available to you for claiming depreciation. Although you can say, is that general omnibus provision available to you, section 32 also, whether it is covered under the omnibus provision of 20th March to 31st December, the answer is no. You cannot claim depreciation and say that it was put to use in the last year. So it will go with the year specific. Now, advance tax due dates falls on 15th of June. All the businesses were shut during the lockdown in the month of April and partly operative in month of May and June. What is the implication if this advance tax is not paid? Well, very interestingly, the advance tax, even for TDS, and one very important thing that we need to know when we talk about TDS payments, every month I have to pay the TDS within the 7th of the next month. Only for the month of March, I have time to pay before 30th of April. The provision entry for the month of March or any payment entry for the month of March, I have got time to pay till 30th of April. But for April TDS, I have to pay it by 7th of May. May, I have to pay by 7th of June and things like that. Now, this is as far as TDS is concerned. Do I have an extension for these payments? As I told you, whenever it is coming to tax payments, there have been no extensions. There have been no extensions. You have to pay it on the due date. However, they said, if the TDS is not paid by 7th of May, 7th of June, etc., I will give you a reduced rate of interest of 9% instead of 12 or 18% up to 30th June only. Up to 30th June only. So that means June month, I have to pay it by 7th July. If I did not pay it on 7th July and I paid it on 8th July, look at this, I paid it on 8th July, I will have to pay 12% interest for 2 months. For 2 months, because the TDS interest is not from the due date of payment of the TDS, but interest will be applicable from the date on which you made the TDS deduction, and the date is considered as a month there. So 2 months interest will be levied for a 1-day default at 18% and not 9%. So coming to this question, advance tax also 15th June. 15th June, if there is an advance tax payable, the answer is unfortunately you have to pay it on 15th of June. However, the interest, what we pay interest of 234C for deferment of taxes, the interest from 15th June to 30th of June will be at 9%, and from 1st of July to 15th of September, suppose you make good this tax by 30th of 15th September, then up to that date will be calculated at 12% per annum. So that is the implication. Next question is, rent payable for shop has not been waived by the landlord, but negotiations are still underway. We are hopeful that there will be some concession in rent. How should the TDS be done for such case for the past 3 months? Now, very importantly, what is the rule of TDS? The rule of TDS says at the time of payment or at the time of debit, whichever is earlier. So your TDS provisions will kick in at the time of payment or at the time of debit to the rent account and credit to the landlord's account, whichever is earlier. So in this case, he has to see that he does not actually debit that account, and if he has got time for paying up to the past 3 months, so he waits for the actual settlement to happen, and based on the actual reduced amount, he can actually pay the reduced TDS on the reduced rental that he actually finally negotiates with the landlord. Next, 12th question is, TDS and TCS rates have been reduced by 25%. How is this going to benefit the SSC? Now, we've already discussed this. This is only a temporary measure. It is not going to benefit me in the overall. If I have to pay, I have to make good the payment at the time of advance tax or at the time of self-assessment tax with interest. If I had really not got to pay and the amount was substantial, with respect to interest and other things, I would have interest and dividends, I would have given a 15G, 15H form. If it were to be a business income situation, I could have anyway filed a form 13 and asked the TDS officer to direct the deductor to not deduct or to deduct less. So in fact, this is only going to enhance temporarily, and between the chartered accountants, it is actually going to create more confusion, because when we do the audit, we need to because this reduction is from 14th of May, I suppose. Yeah, it is from 14th of May. From 14th of May, whatever 10% was there becomes 7.5%, and this is also applicable for 194 IEA cases. 1% becomes 0.75%, and all these calculations will have to be redone when we do the tax audit. We'll have to have 2 charts of rates for us to do the audits. So how is this going to benefit the SSC? Benefit the SSC in terms of enhanced liquidity, but it is going to affect the chartered accountant, the tax auditor, because he has to have two rates, one from 1st of April to 14th of May, the regular rates, and from 14th May to 31st of March 2021. This is only up to 2021 March, so it will be reduced rates. So lockdown period salary for the last 2 to 3 months will be paid by us in a staggered way. Kindly suggest how to do TDS in this case. The only difference between salary TDS and any other TDS is, any other TDS on rentals or interest or whatever other TDS is debit or payment, whichever is earlier. But this TDS on salary, which is covered under section 192, it is only at the time of payment. Only at the time of payment, not at the time of debit. You may debit a higher figure and pay him less. So the TDS will be on the amount you have paid rather than the amount you have actually debited. So that is the answer to this particular question. So TDS rates have been reduced by 25%. Will the same be applicable if I am paying TDS of March in the month of June 2020? So I told you that if this is claimed in the month of March, I mean, if it is a rent of March and you have to actually now paying it in the month of June, 14th May onwards, you have been given the reduced rates. So if you have, the answer is, if the debit or payment, whichever is earlier, the rate as applicable at the time of debit. So that means you will have to pay at the rate applicable, which is the normal rate and not the reduced rate. Form 13 was obtained for sale of immovable property by an NRI with the lower rate of TDS. The property registration could not be completed within March due to lockdown and is likely to be done in the third week of June. Will validity of Form 13 be automatically extended, or whether new Form 13 must be filed because advance has already been received before lockdown? Now, this is a very interesting question. So Form 13 for lower rate of reduction or nil rate of deduction of TDS has already been obtained by the NRI. A very important point, I'm sure all of you know this. If I am buying a property from Jayaprakash for 1 crore and I have to pay 1 crore to him, at the time of payment, what I do is I pay him only 99 lakhs and 1% I deduct under 194 IA and deposit in his personal account. However, if I am buying a property from, let us say, George Bush or Mohammed Mustafa, who is a resident of Dubai, and he has a property in Kannur and he is selling this particular property, the TDS has to be done not under 194 IA but under section 195. And 195 says the TDS that has to be done is the actual amount of tax that he has to pay on the total sum. I mean, there has been an argument whether it should be on the total sum or on the capital gains portion after considering his investments, etc., etc. Now we have been telling it is on the total sum. If it has to be considering his other investments, etc., then he has to approach, or I have to approach the TDS officer, and he has to direct me to consider all those things and make a reduced. Now, assuming that all these things have happened, I have made a Form 13 and I've got a on a 1 crore property, he has told me you deduct only 50,000 rupees or don't deduct and you pay the entire thing. But all these Form 13s, when I make, the lower TDS will always say, the order will say it is valid up to 31/3/2020. The question is, the property registration could not be completed in March due to lockdown and is likely to be done in the third week of June. Now, will this validity of Form 13 be automatically extended, or whether a new 13? So CBDT has addressed this issue by saying that the entire, whatever TDS certificate is given up to March will stand automatically extended up to June, provided you make an application again. So in this case, the TDS will automatically get extended, but an application has to be made. So I can, without waiting for the further order, go ahead with the old order and make the registration. So what is the deadline for filing income tax return for assessment year 1920? That is assessment year 1920, financial year 1819. If not filed earlier, we already discussed this. This is by, you have got time till 31st of July, this month end. If ITR is not filed within 31st of July, what are the consequences? You will never be able to file it unless the assessing officer sends you an order for filing. By quoting that, only you will be able to file. Unfortunately, belated returns beyond the date cannot be filed at all. How has COVID-19 pandemic affected deadlines for filing ITR? We have already said, July, October, July for non-audit cases, October for audit cases, and November for transfer pricing cases. All of them have got pushed to November. What are the deadlines for completing assessments by the Income Tax Department for 1819? I already discussed this. 1819, what was originally supposed to have been completed, time barring assessment, was 30th September 2020, now gets extended to 31st of March 2021. For assessment year 1920, originally supposed to be over, it should have been time barring by March 2021, when it will also get extended. They have not given that, so let's not worry about that at this point in time. So I am an NRI in India. Mr. Jay Prakash, I need another 10 or 15 minutes. Are there many
issues, sir? Yeah, no issue. We have up to 8:45 or normal time.
Okay, fine. So I am an NRI who had to stay in India for a slightly extended duration due to cancellation of international flights and subsequent lockdown. Total period of stay would be around 195 days. So normally we know 182 days is the cutoff, but this person who has come from US, he had to overstay because of flights not being available, etc. So will the lockdown period be excluded while calculating my residential status? There has been a circular from the Income Tax Department number 11/2020 dated 8th May, where they have given relaxation for the financial year 1920. I'm sure a similar thing will also come for 2021. For 1920, they said, if a person who had come to India could not leave India because of non-availability of flights, or because he was not able to move because of his health condition, from 22nd March to 31st of March will not be counted. Also, the circular says if he has been quarantined from 1st of March to 31st of March, he should have been quarantined by the government order, then those 30 days will also not be considered. So they have given two types of classification. If he has not got the flights to go out of India from, because the flights were not available from 22nd March to 31st of March, because of the flights not available, or he has departed on an evacuation flight before 31st of March, for them the maximum period is 10 days. If he has, however, been quarantined for whatever reason, then from 1st March it will not be considered as 1st March to 31st March will not be counted in 182 days. So what is the last date for linking PAN with Aadhaar? Now it has got extended up to 31st of March 2021. Why is it important to link PAN with Aadhaar? Because a lot of people today can have multiple PANs, but they cannot have multiple Aadhaars. Because Aadhaar is a biometrics based card, whereas a PAN, anybody can have multiple PANs, and then told that a lot of people in North India had multiple PANs which they had misused and taken a lot of money, not filed their returns, etc., etc. So to curb all those malpractices, they want this PAN and Aadhaar to be linked. Once it is linked, the other PAN becomes invalid. So therefore, this is important, and this has got extended up to 31st of March 2021. All trusts and institutions registered and to be renewed once in 5 years. But this is a new provision which came by virtue of Finance Act 2020. The first time renewal was to be done between 1st June to 31st of August 2020. As per the Finance Act, by now we should have actually been in the mid of doing all these renewals. Is there any relaxation in this regard? Ordinance has not given any relaxation. The notification also has not given any relaxation. The press release coming on account of this 24th June notification says that this will be considered for extension from October, November, December. So it has got pushed from June to August to October to December. So this has come in by way of a press release from the CBDT, as well as the departmental Twitter has told this. So we don't have to worry about this until 31st of August. From October onwards, it will we have to get into this renewal mode. What is the last date for filing the declaration under Vivad Se Vishwas? We've already seen this. Got extended up to 31st of December 2020 with respect to all those appeals which were pending on 31st of January 2020. GST related, the GST due dates have been extended. However, is there any interest on late payment? We've already seen this. I'm skipping this. I started a business in February 20 and started raising GST invoice. I was not able to get my GST registration certificate till date. What is your advice? Now look at this. I started in February 2020. The provisions in the GST Act says within 1 month from the day I register, I mean, if I'm sure of exceeding 20 lakhs of the turnover, I must get my GST registration done. And the time limit allowed is, let us say, 30 days from that particular day on which I started the business. So if that 30 days expires on, let us say, I started on 29th of February or 29th of February or 20th of February and 21st of February, 21st of March, it gets over. So the normal route now it says is anything between 20th of March to 29th of August for the purpose of GST. They have used August as a cutoff. It will be good if you do it by 31st of August. However, they have given certain exceptions. I would like you to see this particular circular which extended the date. The time limit for completion or compliance between 20th March to 30th August is good as long as you did it before 31st of August, including, I told you, completion of any proceedings, passing of an order for the department, and filing of an appeal by the assessee, reply, etc. When it also talks about application, when we were under the implication, we are under the assumption that filing of application includes application for registration. However, they said this particular extension is not applicable to the following sections. What are those sections? They said Chapter 4, Time and Value of Supply, regular registration. Section 65, which talks about regular registration within 30 days from the start of the business. This particular extension is not available. So in short, if you started your business on 20th of February, you should have done it before 20th of March. Although it falls between 20th March to 30th August, you cannot take the benefit of this. You should have registered and started paying your GST registration. That's a point to be noted. Whether e-way bills have been extended, yes, I think all of us know by now that e-way bill expiring up to 20th of March, generated before 24th of March, extended till 30th of June 2020. Our export cargo was invoiced and sent to the port. However, it could not be shipped before 31st of March due to cancellation of international cargo vessels, and ultimately it was exported in May. And a lot of our clients, your clients, I'm sure, have passed this situation. As per GST, will it be considered as an export for the month of March or May? Now, this becomes a very important thing for accounting. First of all, I have to decide whether I have to treat it as an export for financial year 1920 or an export of 2021. If the risk and rewards in the goods have got transferred to the user of the asset before 31st of March, and it is his responsibility to take the goods out of the port, then it can be accounted in 1920. Otherwise, it has to be accounted in 2021. Now, if I account this in 2021 and I have actually generated the invoice and in the month of March, I would suggest that this invoice has to be, a debit note has to be raised and cancelled, and a subsequent one would be done. That would be a better way rather than to make an reconciliation between the accounting and the tax records. So I have raised rental bill with GST on my tenant. However, this is due to lockdown. There is a significant uncertainty of realization. What will be the impact on GST liability? Now, whenever I'm giving the rent, I would have got an agreement. And if the agreement is saying 1 lakh per month, and if the tenant is not paying me 1 lakh, I am under a duty bound obligation to pay GST on this 1 lakh. So what we are suggesting is, please enter into an agreement with the tenant. If the rental is actually getting reduced, sign that and keep that as a record. And if he's paying only 50% of the rent or no rent, you say that the rent is waived for this particular, it has been decided between the two that the rent will not be charged, and hence there will be no GST liability. Otherwise, you will have to end up paying GST liability on such a amount which you have not claimed altogether. Now we move to the next thing on company law. Companies are supposed to file CA certified copy for their deposits in DPT3, for which the due date is 30th of June. Normal due date is 30th of June. How are the companies supposed to work? I already told you, CLSS scheme has extended all filings except SH7 and CHG1, which can be filed by 30th of September. So please make use of the CLSS scheme. Our company has obtained a bank loan by pledging our FDs. Should we register the charge? Are there any relaxations in this regard? In 1956 Companies Act, pledge was not required to be charge created. But now under the Companies Act 2013, even pledge of FD, any pledge of any of the company's assets needs to be secured through CHG form. Now, should we register it? The answer is yes. Are there any relaxations? I told you on 17th of June, there was a notification from the MCA which said that if I told you 30 days it should be done, 30 to 60 days, 60 to 120 days by paying additional charges. If this 120 days, if you are not able to do, and 120 days expiry happens between 1st of March to 30th of September, then you can file it by 30th of September without paying any additional charges, but you will have to pay the additional and ad valorem charges as applicable. Can a board meeting and a general meeting be conducted through Zoom? The answer is yes, up to 30th of September. A company has contributed 1 crore to Kerala CM Relief Fund. Can it be claimed as a CSR activity? Whereas PM Relief Fund is considered to be covered under CSR activity under Schedule 7 of the Companies Act, Kerala CM's Relief Fund, Karnataka CM Relief Fund, for that matter, any state CM Relief Fund, unfortunately is kept out of CSR activity. And I am aware that in Kerala, some of the companies have filed a writ saying that even this should be covered. But until that gets decided, this matter will not be covered for the purpose of CSR obligation. So we quickly come to the other business laws. MSME definition has been changed to include the turnover. How will this benefit MSMEs? Now, let me tell you what are the changes. MSME definition has got now linked to both investment in plant and machinery and the turnover. Any one of them breaching, it moves to the next level. So for micro, originally it was 25 lakhs investment in plant and machinery. Now they have taken up that investment in plant and machinery up to 5 crores. Up to 1 crore, and turnover up to 5 crores. So they have increased the investment level by 4 times, but they have tagged on, if your investment in plant and machinery is, let us say, 60 lakhs, but your turnover is, let us say, 7 crores. Then you will not be a micro, but you may be a small industry. So like that, you'll have to see the conditions, and cumulative condition has to be seen. 1 crore and 5 crores plant and machinery and turnover. Similarly, small 10 crore investment in plant and machinery, 50 crore in turnover. Medium 50 crore in plant and machinery, and 250 crores in turnover. So if any one of them breaches, suppose a company, an entity, it has to be manufacturing or services. MSMEs cannot be registered for trading activity. Now let me put it a simple situation where an investment in plant and machinery is 50 lakhs, but his turnover is 300 crores. He will never be able to be registered under MSME. Now the notifications have all come out now. What is the basis for investment in plant and machinery? They have linked it up to income tax return. Now we are yet to see, mostly it would be the return on value of the investment in plant and machinery. And as far as the turnover is concerned, turnover as reflected in the financial statements, excluding export turnover, is what has been told. The registrations are already available. Chartered accountants can start doing the registrations for their own firm and for their clients from 1st of July 2020 under the Udyam Aadhaar website. You can already do it. So we have already started doing it. So that answers the first question as far as the MSME is concerned. Due to operational difficulties resulting from lockdown and other government guidelines, our business is running at a low scale, and we may find it difficult to honor our commitments within the contract period. Whether such financial defaults will make us liable for any insolvency proceedings. I told you, insolvency proceedings up to 1 lakh, then they increased it to 1 crore, and then they said for 6 months it will be kept under abeyance. Whether project deadline under RERA for real estate projects has to be complied. Is there any extension? I told you 6 months extension is already given. Banking, we have already seen that. I will quickly close it. We have applied for moratorium of working capital. Should we provide the interest in our books for the year ending 31/3/20, and whether unpaid interest will be allowed as deduction in income tax? Very good question this is. Whether shall we provide the interest in our books? The answer is yes. Definitely a deduction in income tax. Please refer to 43B, which says that this will be allowed. If somebody says I'm going to pay it by 31/3/2021, then you will not be able to get this as a deduction for financial year 19-20. You will be able to get it in the subsequent year. But what we should do is, on a FIFO basis, the first interest I will pay first bolke. If we are able to manage, that would be a better way to solve this particular situation. Government has announced a COVID loan and emergency credit loan. However, the bankers are reluctant or hesitant to sanction the additional limits. What is their opinion? It has happened in some of the cases, so we'll have to educate the banker or tell them to give that they are not able to give it in writing. If I am an eligible, as I told you, if I am an SMA 0 and SMA 1, I am definitely eligible to get this. Of course, the bankers can do their due diligence. I mean, if I have been good enough for an enhancement, now they should give me that enhancement without asking for any additional security. The bankers should help me to help them to eventually have a good relationship. I think that is how the Supreme Court also, in one of the cases, an NBFC was hesitant to give. They said that this is going to be, the Supreme Court has actually allowed, I mean, I think it was the Karnataka High Court. The Karnataka High Court has allowed a writ in one of the NBFCs which said that we are not going to give you. They said that this has to be given. Otherwise, you are making a viable business unviable because of the current situation. The Reserve Bank of India has given this particular provision, so you better give him and make him viable so that he becomes a viable for the country altogether. With the introduction of COVID loans, emergency credit lines, schemes, RBI, what are the risks of the loan defaults and how will this affect the bank's financial statements? I think we should not worry about that at this point in time. I told you, the government has given the guarantee, so the bank is not going to be affected in that big manner. But if other than this 3 lakh crore which we talked about, if the moratoriums and the deferments actually are taken and they are not repaid, then the bank will also be in a big financial mess. And I'm sure the government will be making some changes as and when the time progresses. So that gets me to the end of my 36 questions. If there are any questions from the chat box, I am prepared. Yes, please.
Yes, sir. Yes. Thank you very much, sir.
I need 2 minutes to wind up at the end. I was supposed to connect the honeybee provision, which I need 2 minutes at the end, but I will prepare the questions and take the honeybee at the end.
Right. So thank you very much for your nice presentation and seamless flow of presentation for the last 2 hours and updating and enlightening our participants. And I thought that almost your 36 questions have already covered the entire concerns of each professional, especially in this COVID season. You have clarified all the concerns. And if any questions, I request all the participants, either you post the questions to the chat box, or if possible, you switch on your video and interact with our Gururaj Acharya sir. Meanwhile, I think some questions are in the chat box.
Yeah. Should the absence of an article during horticulture period owing to several treated as leave, and to that extent his leave be reduced? Should stipend be paid during this period? I think our institute has a verdict to say that if it is during the lockdown, you should mark him as present. Like in the case of examination, he's attending an examination for life. I mean, examination for the paper is one thing, examination for life is another thing. I think our institute has been benevolent from the point of view of the articles to say that it will be marked as present. As far as the stipend is concerned, they have told that it is left to the organization. So it depends on the practicing unit whether or not to pay the stipend during the lockdown period, or this has to be treated as part of the regular vertical. Yeah, as it has to be part as regular. Interest for delay in payment of TDS for the month of March 2020, relief not granted. Notice already reached to the deductors. What is the remedy? Interest for delay in payment of TDS. As I told you, yes, TDS, there has been only extension of due dates for filing your ETDS return. But for payment of TDS, there has been no relaxation with the interest payment. They have to pay the interest. Only thing is, instead of 12% or 18%, it is at 9% up to 30th June only. So you have to please pay this. There is no remedy. For category 1 employees, are directors considered as employees for this purpose? If those directors are the full-time directors for whom you are paying the director's remuneration, then the answer is yes, they are also considered as employees. Post your next, the buyer has deducted 1% under 194 IA and paid the full amount, but the TDS is computed at 0.75% and certificates are generated. Is it possible to get another certificate for the balance 0.25% if refund has to be taken, to whom it has to be applied? Now, this has been a very tricky situation. Actually, you should not have made 0.75%. I mean 1%. You have made 0.7. You have actually made 1%. The system is now, for the income tax department, system is already updated. We have not updated. So that is what is the situation. I am sure we'll have to write this as a grievance with the income tax department and get it rectified. Mr. Kumar Bhatt, TDS on sale proceeds of property was paid on 25th of March. Property sale agreement registered in June 20. Can the seller automatically claim credit in assessment year 21-22, or has to file return of income for 19-20 for deferment of claim? TDS on sale of proceeds for property was paid. I'm sorry, I'm not able to understand this question. I need clarity on this. I'll go to the next question instead of wasting time. Whether insurance premium due for payment after 1st of April 20 and paid after 1st of April is eligible to claim it. I already answered this question saying that it looks like you can claim it. It looks like you can claim it. And I'm sure if I were to be the consultant for the assessee, I would ask him to claim it. But he should not claim it again for the next year. Dealer who has not filed 3B from October 18, now filed all 3B, whether he can claim GST input for 18-19 financial year. It looks difficult. That has not been given as a relaxation. Late fee maximum 500 rupees restricted to R1 and 3B. What about R4 composition schemes? yes, the answer is for the composition they have not given. Maybe we can write it to the department for when you have given the relaxation for the big SSCs, why you should not give it for the small composition dealers. Because whereas R1 and 3B are monthly compliances, R4 is an annual compliance. Maybe that is why they have not given a relaxation, but nothing wrong in asking for it. For the moment, there is no relaxation to that extent. So I am done with the questions in the chat box.
So, I think there is two more questions in the private chat box. One is whether the company or firm can deduct TDS at a higher rate without cutting 25%.
I think it should be possible. I mean, I don't see, let me also tell you in the light of the existing provision itself. In the light of existing provision itself, instead of 10% professional fee, could we have deducted more than 10%? The answer is yes. So therefore, it is possible to deduct a higher deduction than what has been given. So this is my answer. Next question, please.
So the due date for updating the audit report is 31st October 2020, but the due date for filing IT return is postponed to 30th November 2020. Yeah. This means that we have to first finalize everything to upload the audit report, and then we may upload the IT return before 30th November 2020. Is my understanding correct?
Yes, it is absolutely correct. You know what has happened? Why did they give more time for income tax return? They said income tax return has been extended up to 30th November. Okay, 1 month before your tax audit report should be ready. So which means 1 month before your financial statement should be ready. You can do your financial statements in November and do the tax audit before. The reason for, in fact, what has happened is forget about this COVID. We were talking about the Finance Act 2020 when the budget was announced. They had extended the due date for filing the income tax return, but not for the tax audit report. The reason being, the income tax return is now going to be auto filled in. Correct. It's going to be auto filled in because of they get information from Form 61. They get information from the banks through various forms, Form 60, Form 61. We are filing a lot of significant financial transactions. And one of the important form for the pre-filling of the income tax return is our tax audit report. Correct. Information in the tax audit report will be automatically filled in the income tax return. I mean, in our office and your office, we are using, let us say, a software package, because of which whatever we fill in the tax audit report will automatically get filled in the income tax return. This the income tax department doesn't know. They think that they are telling as though the moment you file your tax audit report, I am going to give you a magic by telling how the income tax return will be pre-filled. So that to facilitate that magic, actually they're asking you to file the tax audit return 1 month before. So please, as you rightly said, don't extend your time up to filing of the income tax return, but it should get over by 31st of October. Tax audit report date itself. Yes, with the extension, what has happened? With the extension of income tax return, what has happened is maybe your loss returns. You have got that much more time. If you have not filed your loss return, you have got 1 more month's time to, or for claiming any of our Section 11 exemptions, all those Section 80 deductions up to 11, it is available.
Right. But Kumar Bhatt sir, could you please clarify your doubt? Kumar Bhatt sir. But sir,
I think please allow me to conclude then. I think we are.
Okay.
Your 6:45 to 8:45 is a very good time.
Yeah.
But then there is one very interesting serial which is happening in the. But before that, let me complete my slides.
Okay, sir. Anyway,
you are able to see my slides now?
Yeah. It is there, sir. Please.
A couple of things I just wanted to finish off before I have made certain suggestions to the Prime Minister's office and the Finance Minister's office, which I think all of you should also make efforts to. One is this year, especially in 1920, when we are finalizing the financials, there will be a lot of extraordinary expenses that would also be there for the current period. Now, if all of this is allowed to be written off as expenditure, the loss in the financial statement will be quite huge. So we have written it to the CA Institute. The FICCI has also made an attempt to make a representation that this should be allowed to be amortized over a period of 5 years rather than to be allowed to be written off. Otherwise, my net worth, my net profit ratio, my so many ratios will go for a toss. The income tax, we had made this. Unfortunately, it is not looking like it is going to happen. We had estimated our turnovers to be very high. Let us say our last, March is a very important month. We do a lot of turnovers in the last 15th to 31st. But because of that, we had also paid our advance tax by 15th, not expecting the lockdown to come. And now what is happening is in Q4, all our stocks were not sold, but it is getting sold in the month of Q1. Now Q4, I have paid advance tax, and Q1 again, I have to pay advance tax because on the same goods. Now, we had told that the Q4 advance tax, you please allow us to adjust it again the Q1 or the subsequent quarters. I don't know whether that will be taken up, but that's a suggestion that we have made. GST, these are two important things which all of us have to note. If I am actually donating some goods, or some goods have got destroyed because of the lockdown, the input tax credit on those goods which are destroyed or actually not sold cannot be claimed. The ITC cannot be claimed. So we have asked for a relief, or allow a one-time relief on input tax credit on goods destroyed during lockdown and on goods donated like masks, ventilators, or PPEs, and allow adjustment of GST paid on supplies for which recoveries are not made from customers. Just now I talked about the rentals. Even if I don't get the rentals, I have to pay GST unless there is a discount claimed by the customer. Unless there is an agreement with the customer. If it is a case of bad debt or a discount claimed by the customer, I have to pay my GST fully in spite of me not getting anything. It's a double whammy. So we have told them for this situation, this has to be relaxed. And banking, we have made a big demand saying that especially tourism sector, you have a lot of resorts in Kerala, they would have taken loans and they would not be able to repay their loans. And the 6 months of moratorium and deferment will not help them in any way. So we have told them for people who are severely affected, a one-time restructuring has to be given for all their loans. So I hope that will be heard. Otherwise, there will be a big impact on the banking. Okay. So I said 500 crores is the amount which is given for beekeeping initiative. What is the so great about bees for which 500 crores or at least 0.5% of the total 20 lakh crores is actually given for the bees? When we got into the greater details, we found that apart from the honey that the bee gives, it is also important that it is giving the wax for candles and wax for the carpenters and things like that. But more than anything else, bees have a very important role of actually helping the pollination. I'm sure all of us know, and I know people in Kerala are nature lovers, they know the importance of bees which act as a pollinator. So they are the ones which help in maintaining the ecological balance in the system. So much so that I think Albert Einstein went on to say, if bees disappeared off the face of the earth, man would have only 4 years left to live. And that is a statement with which Albert Einstein, because today bees are helping us with our everyday food. When I was looking into the net, I felt that 1/3 of what is there in my plate of food is thanks to bees. Now, honeybees are responsible for pollinating over 110 crops that we use every day, like coffee seeds, almonds, cashews, tasty apples, and delicious strawberries, because they are the ones who help in the pollination. I'm sure all of you know that. Now, why am I talking about bees and pollination in the last slide? Just to tell you that if bees act as a pollinator for maintaining the ecological balance, chartered accountants act as pollinators in maintaining the economic ecosystem of the country. So we chartered accountants are acting as a pollinator between the banker and the borrower, between the tax department and the taxpayer, between the management and the shareholders when we do our audit. So we have an important role to play as chartered accountants, as partners in nation building. We are proud of our profession. Thank you so much. I just wanted to say this before I conclude.
Thank you, sir. Thank you for a nice presentation, and thank you for the support to the Kannur branch. And you have rightly mentioned that sometimes we should have to thank Corona, because Corona has given a lot of opportunity to rethink about life, profession, and knowledge updation. So this is our 15th CP seminar during these last 2 months with excellent experts like you, sir. Sir, I am really thanking you
on
Deemed
behalf of
expert.
the Kannur
Deemed
branch.
expert. Deemed expert.
Okay. Really, thanks to you, sir. Now, for the formal vote of thanks, I request the Secretary of Kannur branch, C.S. Prasad, to propose the vote of thanks. So I think some audio problem is there. So anyway, sir, thank you on behalf of the Kannur branch, all present here. It was an excellent presentation, and I think all we have enlightened and got all the opportunity to clarify whatever may be the issue that we are facing during this Corona season. I'm requesting is that after this Corona issue, it may be after 2 months or 3 months, we will be in the initial stage with a new normal. I'm requesting you to have a session at the Kannur branch. Thank you, sir. Thank you very much.
I want to see Raja Rajeshwaran
And